If you're a bookkeeper, there are some major tax changes that you and your clients need to be aware of. It's all part of a new law called the One Big Beautiful Bill, and it's going to affect how you handle payroll, reporting, and your client conversations. Let me break it all down for you. Hi, I'm Veronica Wasek, the unstoppable introvert and founder of 5-Minute Bookkeeping. I help virtual bookkeepers to become confident professionals and thriving business owners. In this video, I'm breaking down the 3 big changes in the new law, officially called the One Big Beautiful Bill, or Public Law 119-21, that was just signed into law on July 4th, 2025 by President Trump. So let's walk through what you need to know and how you need to prepare. Number 1, no tax on tips. Let's start with one of the most talked about provisions, no tax on tips. Beginning with tax year 2025, employees or independent contractors who normally receive tips, such as servers, bartenders, hairstylists, and rideshare drivers, can deduct up to $25,000 of reported cash tips from their federal taxable income. The deduction phases out when the taxpayer's modified adjusted gross income exceeds $150,000 or $300,000 for a joint return. This deduction will be available for tax years 2025 through 2028. Employers will be required to provide statements to their tipped workers showing the amount of tips paid. These must be reported tips, so if the employee didn't report them to their employer, they don't qualify for the deduction. As a bookkeeper, you'll want to remind your clients that Social Security and Medicare taxes still apply to tips paid, so the no tax on tips only applies to federal income tax withholding. Number 2, no tax on overtime. There's also no federal income tax on qualified overtime pay, again starting in 2025, which means that overtime earnings over 40 hours a week can be deducted on the employee's federal tax return for up to $12,500 for an individual or $25,000 for a joint return. The deduction phases out when the taxpayer's modified adjusted gross income is greater than $150,000 or $300,000 for a joint return. This deduction is only allowed if the total amount of qualified overtime is reported separately on Form W-2, and the no tax on overtime deduction will be available for tax years 2025 through 2028. Be sure to remind your clients that they need to track overtime wages separately in their payroll systems and that overtime wages must be reported separately on Form W-2. And just as for tips, Social Security and Medicare taxes still apply to overtime paid. Remember that the no tax on overtime only applies to federal income tax withholding. Number 3, changes to 1099 reporting. Let's start with 1099-K changes. There are important changes to Form 1099-K that bookkeepers need to be aware of. Under the new law, beginning with tax year 2025, third-party payment platforms like PayPal, Merchant Services, and Venmo will only be required to issue a 1099-K if a user receives more than $20,000 in total payments and has more than 200 transactions during the calendar year. This replaces the much lower $600 reporting threshold that had been temporarily delayed. This means that many small sellers and contractors may not receive a 1099-K in 2025, but they are still legally required to report all taxable income, even if they don't receive a form. And now for some great news. Changes to 1099 forms. Starting in 2026, the threshold for issuing Form 1099 NEC for contractor payments and Form 1099 miscellaneous will increase from $600 to $2,000. with the threshold amount to be indexed for inflation annually after calendar year 2026. This is a big win for bookkeepers who prepare a lot of low-dollar 1099s. That means that for independent contractors who are paid less than $2,000 in a year for payments made starting in 2026, you won't need to issue a 1099 NEC. But remember, this applies to payments made in 2026, and those 1099s won't be issued until January 2027. So we have to wait for this new rule to take effect, but I'm so excited about the new rule because it will save bookkeepers so much time. What's next? Between now and the end of the year, the IRS needs to update the forms and instructions that are affected by the new tax rules, such as Form W-2, 941, and 1099s. Payroll service providers need to update their software for tax calculations and required reporting. This will take a few months, so you as a bookkeeper need to stay aware of the changes that are being made. But for now, make sure that you educate your clients on these very important changes. And keep in mind that there are many other provisions included in the One Big Beautiful Bill. Be sure to get your information about this bill from reliable sources. I will link some trusted resources for you in the description. I will also link for you a downloadable summary of the 3 key changes that I mentioned in this video. Do you want to know how I review my clients' books in just 15 minutes? Then sign up for my free Smart Review checklist. I'll link that for you in the description. And if you would like to learn about the essential diagnostic skills that every bookkeeper should know, then watch this video next. I'll see you there.